We'll start with the first item, that is transfer to reserve. So what happens when we are going to talk about transfer to reserve? This amount is going to be accumulated, right? It is going to be accumulated before the final distribution of profits between the partners, right? Now, when we are going to retain this amount, we might have either the net profit as a base, or we might have a divisible profit as a base, right? So that is the reason why we have to be very careful while reading the question, whether the question requires you to calculate this transfer to reserve based on the net profit or based on your divisible profits. So if you are careful, you might escape without making any mistake. If you go ahead and calculate on net profit and do your problem, then you might end up with a wrong answer. So be very careful while you are doing this problem. Ensure that whatever transfer to reserve is there, it is based on the net profit or based on the divisible profit which is required in the question. So read the question twice before you proceed in the transactions. Okay, so you can go to page number 2.10 where you can see that the transfer to reserve is going to be done. Now we can see the first option is amount calculated as a percentage of net profit. So net profit is the amount which is going to be transferred from where? From the profit and loss to the P&L appropriation. So you take that amount and you calculate a percentage. Let's assume 10%. Okay, your net profit was 5 lakhs. So on 5 lakhs, 10%. So you are going to transfer to the reserve 50,000. Okay, so this is how we will calculate, right? So now then we go to the next section, which is amount which is calculated as a percentage on the divisible profit. So like I told you earlier also, divisible profit is nothing but the amount which is left after all your appropriations, right? So we calculate that amount, on that we apply the percentage of the transfer which is going to be done to the reserves. Now the third situation is that when you are going to calculate the amount which is going to be calculated as a percentage of the net distributable or divisible profits. At this point of time, the amount which is going to be transferred to the reserve will be what? Your net profit plus the interest on drawings, right? So it is going to be inclusive of interest on drawings. So you have to take the denominator as 110 if it is 10%. So simply we will calculate, see the example over here, 10% of the net distributable profit is to be transferred to the general reserve. I repeat, 10% of the net distributable profits. Now net profit is 1 lakh. Interest on drawing is 10,000. Interest on capital is 44,000. So can you just calculate what is the divisible profit now? So we have 1 lakh minus 44 minus 10. So we are going to have interest on drawing also over there. That means from 1 lakh we first remove 44, that comes to 56, and then we have to take the interest on drawing which is 10,000. So now your profits are become 66,000, and so 66,000 into 10 by 110, that comes to 6,000 rupees. This is the amount which is going to be transferred to the reserve.